Well, let's talk a little more about all the numbers and the market's response to them right now with Diane Swank. She's chief economist at Grant Thornton, and David Kelly, chief global strategist at JPMorgan Asset Management. Good morning to you both. Diane, you've heard our discussion here. Your first reaction, there's no getting around the fact that it's a disappointing number, but I wonder how you would put it into context of the overall economic trend that we're seeing.
Well, unfortunately, we're seeing a huge deceleration globally as well. We've seen really weak numbers come out of China recently. The Delta variant is hitting economies that escaped other waves, and I think that's very important to take into context. That hurts the supply chain disruptions that we've seen erupt out there, but it also hurts demand. And looking at what's happening and where we saw the Delta variant hit the employment report, that's demand related. We saw a blow, as you already mentioned, in leisure and hospitality, food services. We know that from the credit card data, that spending stalled out and started to come down a bit as the wave got worse in the worst hit areas. Mobility actually pulled back during August in those hardest hit areas. We also saw the pullback in retail, as you noted. And I think an important issue has been the irony of what happens to healthcare when we get overwhelmed at hospitals. Healthcare employment actually fell. And that's partly because we can't find enough people to work, but also we canceled elective surgeries again during the month in many of these hotspots as we went into this employment report. We also heard reports of people literally walking off their shift mid-shift because of their frustration and how overwhelmed they are with what's happening in their hospitals in response to Delta. And all this leads into the disruptions that we're going to see from Hurricane Ida, which hit on the 16th anniversary of Katrina. We know from that it suppressed employment for 2 months. So you've now got probably 3 months of really weak employment data going forward.
David, if that is the setup here, it seems as if it must be as simple as just tracking the pace of the Delta surge, seeing exactly whether cases come down and just looking at the real-time, consumer data. Is that really all that we in the Fed ought to be watching at this point?
No, I don't think so. I think we have to ask some real questions about what is full employment today, because this is a different economy from the economy we had at the end of the last long expansion. Then we could get the unemployment rate down to 3.5% without explosive wage gains. Now, over the last 2 years, if you look at the wages of production non-supervisory workers, they are up 9.9% over a 2-year period. That is the strongest we've seen in 40 years. And what it says is that for various reasons, there just isn't labor supply in America right now. We've got 10.1 million job openings. Half the small businesses in America have jobs they can't fill. So this is really a labor supply constraint. It's a supply constrained economy. And I think I do think the Delta variant is going to have an impact, a significant impact in September, more so actually than in the August report, because I think it sort of gathered pace over the course of the month. But I think this really is a supply issue. We need to think about immigration. We need to think about how do we deploy vaccines to get people back to work. But I think it would be a mistake to see this as a lack of demand. This is really a lack of labor supply.
It's such a key point, Diane, especially given the fact that, the NFIB just earlier this week noting that half of small U.S. businesses have unfilled job openings. The demand is there. Does the supply side become a bigger part of the equation? Does this change? And I guess thus the expectations become more spring-loaded for the September jobs report when you see some of those enhanced unemployment benefits starting to roll off in the states where that hasn't already happened this month. You have the eviction moratorium basically being lifted for better or worse. And, of course, the reopening of schools and kids going back.
Well, that's a really good point. And one of the issues that we know is that we don't know. The preliminary data is that it's not a huge impact as a deterrent, the supplements, but we'll really find out in September. But the labor supply issue goes so much deeper. This is both a collision of supply and demand, but demand has slackened. That really has to be underscored. We are looking at GDP growth below 4% on the third quarter now. That is a major slowdown in momentum. That said, I think it's important to look at the supply side issues go so far beyond those supplements. We see child care issues, child care hiring at child care services actually fell again for the second consecutive month. And we saw participation rate among some of those that are single mothers that are the most vulnerable to this still weak. And they're the ones that are going to be not able to return until their kids can stay in school. And the fact that many schools are going back into quarantine after they open, that further mucks up this idea that we had that the labor supply would be there much more readily as we reopen schools. And I think that's another issue. The other part that everyone forgets about is that we had 2 million excess retirees that don't want to go back to work at the moment. They could return to the labor force. We did see a big pop up in participation by teens, but that's off of low levels. I mean, the kinds of movements we're seeing from teens is encouraging, and that could be a source of labor supply. But I absolutely agree with David that the immigration situation is a huge problem when you've got an aging labor force, people retiring and afraid to go back to picking up 15 to 20 hours a week after retiring after age 65 because of contagion and the hazards of working a frontline job.
Shepard Smith here. Thanks for watching CNBC on YouTube.